Hi traders, this is Nathan from Forex and Binary Club. Whilst talking to a lot of different traders, I often get asked what is the RSI indicator and how do you use it. So today I will teach you how to read the RSI indicator and how to apply it in a trading strategy. So in order to trade this strategy, we're going to need a simple charting system such as the one I have on screen right now. I personally am using the NetDania free charting system, which I find is simple and user-friendly. However, if you want to use a different charting system, please feel free to do so. As you can see, we have the basic chart in front of us, no studies or indicators added to it, simple candlesticks. Now what we need to do is to add the RSI indicator. We will find this indicator under the study section up here. What we're going to do is we're going to click on studies, type in RSI, and the first option that comes up is the one that we want. We're going to click on it. We're not going to touch any of the parameters. We're going to leave it as is. All we need to do is press the add button and the OK button. If you look at the bottom of your screen now, you will see that we have added another chart with one line going through the entire chart, down here at the bottom. This is the RSI indicator. The RSI generally reads from 0 to 100. We can see the numbers at the side here. Now, when we are talking about trading with the RSI, the relevant numbers are 30 and 70, as we can see over here, 30 and 70. Now, let's explain simply what the RSI is. The RSI, also known as the Relative Strength Index, measures when an asset is overbought or oversold in a certain time frame. Basically, the RSI indicates to us when would be a good time to buy and when would be a good time to sell. So just like in any other market in life, when an asset is overbought, meaning it is too high, we would expect the price to drop, so we would sell. And vice versa, if the asset is oversold, meaning the price is too low, we would expect it to go higher, so we would buy. Now, what we are looking for is when the RSI line, which is the line down here going through the entire charting system, reaches the 30 or the 70 line. It can touch the 30 or the 70, or go above the 70 line or below the 30 line. Once it reaches those targets, we will trade the reverse position. So if it hits 30, we will place a buy position, and if it hits 70, we will place a sell position. Now, let's show some examples as we had today. So if we look over here, we can see the RSI hit over the 70. We would have taken a sell position at this point. And as we can see, after it hit the 70 line, we have a nice long downtrend, which is exactly what we need. Now, if we take another example, like over here, where the RSI is under the 30 line, and look at the chart above, we see that it is below the 30, and we would have taken a buy position. As we can see, it took a short uptrend. If we look for another example right here, we can see the RSI hit below the 30 again. And if we would have taken the buy position up here, in the short term it was an uptrend, and in the long term an even bigger uptrend. That is the RSI, and that is how we use it to trade. Now, please keep in mind that what I showed you here today is very, very basic. This indicator is not a magic trick that will magically work every time with no thought. A money management and risk management strategy are very important here. I will say it is simple to understand and use with the right guidance. So if you want to learn what chart time frames are best used with the RSI and what expiry times to use for this strategy, please comment below or get in touch with us on Facebook at Forex and Binary Club.